to service our interest payments. That clearly is not sustainable, and that is what really needs to be addressed.
And how do you think the central bank can actually deal with this multiple exchange rates?
Well, they just need to have faith in the market-driven mechanism. They've set it up, let it work. Let everybody use one market with a transparent bid and offer rate system, and the rates will come down.
Okay. Now let's look at the budget, 7.44 trillion naira. Is it capable of achieving the federal government's economic recovery plan?
Well, before we even go to the new budget for the year, the challenge right now is that we have about 1.2 trillion of capital expenditure. And out of that, from last year's budget, only 50% of that has actually been spent. So in order to create this stimulus, it is important that government is still struggling with revenues. And if you haven't funded 50% of your capex budget from last year, then you already have another deficit that you need to finance for this year that you're adding to that. So I think what is important is that government needs to print money and back it with a capex bond and give it to the finance minister and let her use it to fund those existing projects, because we need to sustain those stimulus from last year. And don't forget, we're already halfway through this year. And more importantly, at the end of May, this government has to give a report on its economic performance, because it's now 2 years into this administration and there's time to account for what you've been doing over the last 2 years.
We'll get to that. You talked about government needing to print money. Wouldn't that have its own implications, particularly for even inflation? Don't you think so?
Not really, because if you print the money, we need the stimulus. You've only been able to finance 50% of your capex. So the stimulus we're getting now is not at the right levels. So if you print the money, but you back it up with a capex bond that is repayable, then you won't have too much of a problem with maintaining that stimulus, and then we can get that growth up and running. The inflation we have right now is more on the supply side with more of cost push. We do not yet have a demand pull problem. And with this stimulus, you would have the growth impact on it.
Okay. Now, if, of course, government would have to print money, you've talked about government putting up policies that can actually work. Then the issue of implementation comes in here. If they have to do that, what's the assurance that such will be monitored very well for it to be properly implemented?
Well, that's the challenge now, and that's what government is all about. And they've promised us that there's transparency, there's accountability, and I think that's what the finance minister said yesterday, that they will ensure that a lot of the capex money is going into projects that will make an impact in the economy. And I think that that is a basic promise that this government has undertaken to make sure that happens. And I think that is really what we need to do. And the Economic Recovery Growth Plan addresses this.
All right. Now let's look at this present administration's midterm report. What's your assessment?
Well, if you take a look at the numbers, and I think really the economic numbers, you can see that the GDP of the country went from about 5.2% all the way down to minus 2.24%. There was a massive crash in the GDP in the last 2 years since they've been here. We can go on and on about the 60% devaluation in the Naira and how the economy went into a recession. So basically, this administration brought in a recession into the country, which is unprecedented in the economic history of the country. So in terms of that scorecard, I think that is pretty clear. The central bank on its own has mismanaged the foreign exchange system, lost confidence, the foreign portfolio investors left. We got taken out of the JP Morgan bond index because we did not put in place a market-driven system. We've done that now, and we've paid the price for all that. We've seen 60% devaluation in our currency. There's confidence. No, our excess reserves have gone, and we're now in a recession. But I think clearly the Nigerian government has taken responsibility right now with this Economic Recovery Growth Plan. They've articulated their policies. The alignment of fiscal and monetary policies, as we've seen, are now in place. And we're now seeing all the implementation ministries and the policy ministries singing from the same hymn book. There is consistency. The acting president has restored a lot of confidence to a lot of businesses by this foreign exchange intervention recently. So as you can see from the graphs, the trajectory on growth is on upwards and inflation is on the decline. So right now, though they had problems in the last 2 years, they have put in place a mechanism that can sustain economic growth with the economic recovery growth plan. So what we now need to wait for is the policies that can support this and to be able to see us on a path of growth for the next year or so.
All right, let's look at some of those sectors you did mention in your slide there that actually contributed to the economy getting into recession, talking about agriculture, oil and gas and all that. Talk us through this.
Well, although we have a recession, the key problem that put this economy into a recession was the fact that we have not been investing in the oil industry. Industries like agriculture, financial services, entertainment and media are still growing and growing impressively, be that so. But the problem is that since 1977, Nigeria hit 2.5 million barrels a day oil production. Now, 40 years later, we have not been able to cross production of 2.5 million barrels. We've not even been able to reach 2 million barrels. So we have not invested in the oil industry, and at the time the oil prices came down, it affected us significantly. And because we depend heavily on these oil prices, the funding was not available. So I think the whole issue of trying to diversify the economy is what we're talking about now.
All right, Mr. Adebajo, just a quick one before I let you go. The MPC meeting, of course, is next week. So what are your expectations? Well,
from the Monetary Policy Committee meeting, we expect that the MPC will hold rates. Because as you can see from the graphs we displayed, inflation is a big problem. If you have high inflation, you cannot get growth. So we'll expect them to maintain those rates to be able to sustain the downward trajectory on the inflation rates.
All right. Thank you very much for your time, Mr. Adebajo.
Thank you very much.
Right. I've been talking to Tilewa Adebajo. He's an economist and the CEO of the CFG Advisory. We'll take a quick break. When we return, we'll look at today at the NSC. To stay with us.